There's a whole area of the market that gets sort of lit up when the Fed gives sort of that dovish signal, or, Fed is resuming its cutting cycle. And I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin. Because I think investors were thinking this is the dog days of August and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season, and at the end of the day, the economy is holding up pretty well. And I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger. I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
As we see Donald Trump, BlackRock, and Michael Saylor all making big moves in the crypto market, financial analyst and Bitcoin bull Tom Lee breaks down what's really happening in the market and why it matters for Bitcoin. He recently shared his take on the current economic uncertainty. With tariffs and recession fears creating market volatility, Lee suggests that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price sits just over 118,800, while Ethereum hovers just over 4,600. He says the next phase of the crypto cycle is critical, and Bitcoin's next big move depends on how the market plays out in the coming weeks. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
It's just a reflection of the fact that the market was bracing for a hot CPI, knowing that not only was the Fed, but economists were warning that we'd start to see inflation coming through in the July CPI report. So I think it was actually elevated compared to where it was in June, but I think it was much better than expected. So it's one of those rip off the Band-Aid moments.
Just under a 95% chance of a cut coming up in September, being priced in by bond traders. That rate cut, what area of the market does it benefit? Does it definitely just benefit the cyclical sectors? What does it mean for the tech trade, et cetera?
To me, there's a whole area of the market that gets sort of lit up when the Fed gives sort of that all dovish signal, or, Fed is resuming its cutting cycle. And I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin.
Oh, Bitcoin. All right, that's interesting. By the way, potential rate cut. We've often thought we're going to get those rate cuts, and they don't actually happen, even though they're being heavily priced in right now. I want to get to your word of the day. What's your word of the day today, Tom, and why?
The word of the day to me is breakaway. And the reason I'm saying that word is that in early July, Bitcoin made a breakaway move, and I think Bitcoin has been leading the markets by a month. So believe it or not, I think that this is the month that the S&P, makes new highs towards 6,500, 6,600.
Interesting. So you think we hit new highs this month? What's the catalyst? Because, we're pretty much through earnings season. So what pushes us higher other than a lot of optimism over a rate cut coming up?
Frank, I think part of it is positioning and sentiment, because I think investors were thinking this is the dog days of August and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season, and at the end of the day, the economy is holding up pretty well. And I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger.
All right, but I'm going to guess that Bitminer might be your pick today. It's a company that you're involved with. I want to talk to you about Ethereum and also Bitminer.
Yes. Well, Ethereum, has probably become the surprising sort of hit for cryptocurrencies this year because it's up 28%, outperforming Bitcoin. But, in some of the work we've done, we believe it's the biggest macro trade over the next 10 to 15 years. And a lot of it has to do with the fact that stable coins have really become the ChatGPT moment for crypto. And now we have the Genius Act and Project Crypto from the SEC, which is Wall Street, essentially running onto the blockchain. But one of the best ways we believe to sort of have exposure is through Ethereum treasuries, and that's a company like Bitmine, which I've become chairman recently.
So when we're talking about Ethereum, It's one cryptocurrency. Stablecoins are obviously in the news, especially with the Circle IPO and Circle just reporting its earnings and offering more shares. And then you mentioned this Bitcoin as well. Why are you so bullish on Ethereum? What are the opportunities you're seeing in Ethereum in particular?
Well, Ethereum is the second largest blockchain, and it's different than Bitcoin because with Bitcoin you can't really do programmable contracts, so smart contracts. Wall Street needs to find a stable and legally compliant blockchain to work on. The majority of stablecoin creations are taking place on Ethereum, and when you look at where JP Morgan is building a lot of its layer 2s or Coinbase or Robinhood, they're choosing to do it on Ethereum. So it is the place where Wall Street is essentially financializing the system.
All right. So, by the way, you're not the only bullish person or bullish company when it comes to Ethereum. We're just looking right now. Standard Charter raising its year-end target for Ethereum to 7,500 from 4,000. Right now, Ethereum's trading right around, I believe, 4,700. Are you this bullish, 7,500 by year-end?
I think that's within the realm of expectations. Ethereum, I think first needs to clear its prior highs of around 4,800. It's within 6% of that now. Believe it or not, Bitcoin's obviously been making many new all-time highs this year, but Ethereum is still below its 2022 highs, 2021, 2022. So I think once it clears that level, I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
All right, one more time before we get out of here. You're known for your granny shots. Can you give us one of your granny shots right now with the fact that we have the markets trading at all-time highs, the S&P and the NASDAQ, again, closing at record highs yesterday?
Yeah, I think really one of the granniest of our granny shots is NVIDIA. It's still one of the most important companies. Well, it's probably the most important company in the world. And in terms of forward multiple at 30 times, it's actually still reasonably priced. I believe its PE multiple is still ranks number 38. There are 37 stocks in the S&P 500 with a higher PE than NVIDIA.
Embracing an unyielding enthusiasm for the Bitcoin realm, Hugin confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Hugin reassures that a long-expected surge awaits as we head into the second quarter of 2025. Now we'll hear Tom Lee break down what implications the Fed rate cuts have and the current risks the market faces.
The stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
Sure.
As we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Well, what if they don't do anything?
The economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world on policy rates. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move. I think the market reaction, of course, is really how people are positioned. And we at Fundstrat, we're finding a lot of investors are positioned as if we're going to see a pickup in inflation. So to them, they were expecting a really hot PPI number, thought this was going to start a decline in stocks. And that's why I think markets didn't fall as much, because I think many people have been positioned for a sort of a hot set of PPI numbers. Last week we said the breakaway move would be S&P 65, 6,600. So I think that's still intact. I don't think that one data point is enough to change a thesis around the trajectory of inflation. And our base case remains that this is going to be ultimately viewed as transitory by the market.
But we have this tension that exists. Labor market looks like it's weakening, and now the inflation market looks like it's at best just kind of staying where it is, if not getting a little bit more sticky. I mean, that is a real tension that the Fed has to deal with and may ultimately have to make a decision on one side or the other. We think we know which way they'd lean, but we're not entirely clear. I'm not sure the market is either.
Yeah. Well, I guess this is the challenge for the Fed because they're having to make a decision where there's no equilibrium, right? Because the market's tension around whether there's weakness and deviation from the job side versus inflation, it is really the Fed trying to manage expectations and keeping inflation expectations anchored. So a lot of data between now and the next meeting may not be inflation related, but it's really how the market is perceiving these inflation prints. And if we shift towards viewing it as transitory, it makes it easier for the Fed to move forward. If we look at August 1 as like a benchmark, because we're halfway through the month, even with today's decline in small caps, they're up almost 4%, which is 350 basis points above the S&P. And Ethereum, which is correlated to small caps, is up 26%. So I don't think we've unwound any of the progress small caps have made following a series of data over the past 2 weeks. So I think today's PPI number is not really being seen as, when a market's perspective, as really changing anything.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?